Hello everyone, this is a weekly COT review. This video is brought to you by Finteria Markets. We offer the best trading conditions for Forex and crypto traders on the popular MT5 platform. We also have plenty of interesting tools and services that can help you to analyze the markets more efficiently. Please visit the website for more information about the company. So in this video, I'm going to talk about COT charts. If you have never heard about COT, here's a brief introduction for you. First of all, COT means commitments of traders. This is a report that is published by CFTC on a weekly basis. And the main goal of the report is to increase the transparency on the financial markets. The report has been here for over 45 years and it's largely followed by the market participants. It's one of the best insider information that we have for the futures market. So the report shows you the positioning of large speculative traders, and it allows you to analyze and understand the sentiments of the market. However, there's a 3-day delay in the report. It's published each Friday, but represents the breakdown of positions from Tuesday. So let's switch to the website. I'm going to show you where you can actually find this information. You need to go to market info, then select COT charts. We have recently added 2 more tools. The first one is monthly volatility, and the second one is FX risk aversion. So those tools can be very interesting in for you in your trading. They can help you to analyze the markets better. Please have a look. So I will select COT charts. And here, first of all, you will find a brief description about the service, how it works. And then you will find the table with the last update from September 7. So this information is updated on a weekly basis. And slightly lower, you will find 3 additional charts that help you to analyze the situation. First of all, you will see net positioning, so that's the difference between long and short positions, along with the price of the underlying instrument. So you can visually analyze, understand the correlation between the instruments, and see how the situation changes graphically. So the second chart shows you long and short positions separately. And finally, the third chart shows you net positioning to open interest over the last 5-year range. So let's review once again the table and the last changes. I'm going to pick up few instruments and we will discuss them together in this video. So I would like to mention the most interesting changes. We can see that actually the gold is the most bullish instrument. It's on the top. This table is sorted by the most by net positioning. So if it's positive, you will see the instruments on the top, and the most bearish instruments are at the bottom. So here we can say that the gold actually didn't change much. The weekly change is not significant because the net positioning is pretty large. The situation is more substantial for the euro. So as you can see, the weekly change is almost 16,000. So let's have a look at euro dollar. Here I have euro dollar by default. We can see that net positioning is decreasing gradually. We had an uptick and also the price has increased substantially over the last week. We can see that short positions are slightly decreasing while long positions remain stable. And the third chart is actually slightly more bullish because the net positioning to open interest has been extreme for some time. So it looks like those 3 charts are pretty mixed, because here we have pretty neutral signals, while the third chart is more bullish in my opinion and shows a potential turnaround. But overall, I would say that I would closely watch if the net positioning becomes negative. That would be very strong signal. We didn't have negative positioning in the market for a very long time, since the beginning of 2020. Last time it was actually in March. So in case if the net positioning will become negative, in my opinion, that could be a strong signal, a bearish signal for euro. But overall, situation looks pretty neutral. Let's pick up another currency, the New Zealand dollar. We can see a substantial change, plus 6,000. So I'm going to switch it to NZDUSD. So here we see that long positions, the net positions are slowly building up, becoming more positive. Here we see a decrease in short positions and a slight increase in long positions. In my opinion, long positions have a lot of room to grow. And we also see that the third indicator, net positions to open interest, is growing, and it has a lot of room to grow. So in my opinion, all three charts are showing bullish, quite bullish stance. And this is in line with the fundamentals, because as you know, the economy of New Zealand is doing much better than the rest of the world. The Central Bank of New Zealand is planning to increase the interest rates. And actually, I like the situation. I like how it looks. The net positioning became positive. And in my opinion, this chart is is not screaming yet, but it's saying buy the New Zealand dollar. Let's look at some other currency pairs. I think another interesting situation can be on the British pound. There's a large decrease. So despite the uptick in the price, we can see that net positioning is getting more negative. Here we see a large decrease in long positions, while short positions remained neutral. And the third chart is getting more bearish, but not yet extreme. So probably we still have some room for this chart to give any signals. So in my opinion, this is still pretty mixed. Recently, over the last week, we had some bullish comments from the Bank of England. So probably this is not yet accounted by the markets, and the situation can change very substantially. We had strong movements on the British pound. I think that the charts do not fully reflect the latest situation. So I wouldn't say that there is any particular signal from COT charts. And one more chart that I would like to pick up is the Australian dollar. Let's have the situation. As you can see, there was a really significant change. Despite the uptick in the Australian dollar, the weekly change was negative, and it's getting even more bearish, in my opinion. So here we can see a substantial decrease in net positioning. So long positions have decreased, but as well, you can see that the market is fixing some profits. So probably this is the main reason of the rebound, is that some market participants are taking their profits. And that's why we had a really strong rebound in the Australian dollar. Also, if you will switch to the last 10 years, you can see that this is probably one of the most extreme net positioning in the history that we had. So yeah, this can be very dangerous for short positions, because when the positioning is very extreme, we can have a really strong rebound. This is actually what we had over the last weeks. But still, you can notice that the positioning is very bearish, and this signal is also showing extreme bearishness of the market. So I hope those charts can be very useful in your trading. Please leave your comments and questions if you have any. If you have any ideas from those charts, please share them with me. I will be very happy to discuss and provide you my additional comments. So this video was brought by Finteria Markets. Please visit the website. We have plenty of new interesting things that we have added to the chart, to the website. And you can also download our trading platform and use currency indices. This is also an amazing tool that we offer to Forex traders. Thank you for watching this video, and have a great weekend.